Tell them this chart wasn't made for panic. Tell them my loss don't stay too long. I cut that quick, I don't change no habit. It's all I know, I've been right so wrong. Brokers call me disruptive, oh yeah. Said I burn out one day, yeah. Cause every trend that love me, oh yeah. I flipped it, walked away. That's real trade, oh, real game. Ooh, just talking that way, oh, that real way, real way, real way. They don't get the pain of patience. They just gamble, beg for noise. I see patterns in the matrix. I play silence like it's poison. Paper hands in confession. Oh yeah. Still pray for one green day, yeah. But I saw how they faded, oh yeah. I know one day it would take. Heaven only lets a few in. Heaven only lets a few in. But I've been charting with the movement. Charting with the movement. Don't waste weak advice on me. Your TAs make believe I'm better off with my own code. That's real trade-off. Real game. Ooh, trust talking real way. Oh, that real way, real way, real way. That's real life. Oh, that real life. Ooh, mama told me that green card's deep. I said that's fine, I'll be green. Profit Lord, oh, profit Lord. Ooh, I talk just like gospel truth. They still pray I lose my
Oh, brother, oh, brother, oh, brother. Hola.
Hang on. Forgot to switch over that little soundboard there. I'm just trying to dive into Johnson & Johnson's earnings really quick. But folks, welcome back to another episode of the Matt Kohrs Show, where I'm Matt Kohrs and I am not feeling good this morning. I thought we had all the classic signs of a fake out, breakdown, V-shaped recovery. And you could imagine my surprise when I open up the charts this morning and I just see nothing but red, nothing but blood, nothing but, once again, another overnight session of carnage. I honestly, yesterday, it was brutal, unrealized I was down a lot, but I felt as if I had a shot. I felt as if that meme in Dumb and Dumber, so you're telling me I have a chance. That's how I felt. I was like, I'm rarely lucky in this game of trading, but maybe, just maybe, the US and China are going to calm everything down. We're going to have a good session of earnings. Seasonality is going to kick in. The government's going to open back up. I saw it. I saw this, like this vision, this epiphany of a paradise, a stock market utopia in which maybe, just maybe, I wasn't going to lose $150,000. Just maybe. I go to bed. I'm calm. I see that the futures market is up. It's green. I'm putting the vibrations out into the universe. When I open this up, it's going to be a giant gap up. We're going to be talking about 6,700, 6,725. S&P 500, I know this wasn't complete visions of grandeur. I wasn't imagining a gap up to a new all-time high, but I thought we'd be within that fighting weight class. Fast forward a night where I'm just viciously attacked by the little micro panther who lives with me. Every hour on the hour, she feels the need to rip my feet apart. So as I was not only dealing with that physical battle, obviously, I didn't realize that there was a larger financial battle taking place as I attempted to sleep. I get up this morning, and for whatever reason, my phone was already so zoomed into the chart that it wasn't the full picture, and we had dropped so much. It was actually like that joke you see on the internet of just like the bar is through the bottom of your screen. I was like, holy shit. So we're going to see how this goes. We are going to see how this goes. There is an upside gap fill not far away, so we might tap that and crap, but there is an upside gap fill to play on the SPY. There's an upside gap fill to play on the Qs. Iron Condor is back. Captain Condor playing the Iron Condor is back. If you want to know those levels on SPX, it's 6605, which we are actually below, is the put credit spread, and the call credit spread is 6685. So there is upside gap fills to concern yourself with. Their Captain Condor is playing at decent size. Jerome Powell speaking midday today around 12:20 during lunch. Jerome Powell, the chairman of the Fed, is going to be speaking. We have a host of earnings from the major financial plays. We'll be hopping into all of those. Government still shut down. There's a lot to get into. There's a lot to talk about. There's a lot to chit chat about. And I'm at that point where I'm in the wood. I am in impressive. Matt stays so not positive, Ron. This is that nervous energy when you're like, dude, do I just buy that toaster off of Amazon and finally take a bath? Like, it's not. This is not positive, dude. not a positive morning. This is why I cry in the shower. This is 100% why your boy spends most of his free time not streaming, crying in the shower. Fuck this, dude. There's just certain days you wake up and trading is awesome. And you're like, damn, like, how can you make this much money this quickly for playing numbers on a screen? And then there's other days you wake up and you're like, this is the dumbest thing I have ever heard of. Why does anyone ever trade? It's going to be one of those days. It's going to be one of those days. I am personally looking for a miracle. I am doing everything in my power to put all the positive karma on my side. And maybe, just maybe, with low statistical likelihood, I can pull a rabbit out of my hat and see how this goes. Want to borrow my toaster? Oh, man. It's going to be one of those days. But hey, maybe we're going to get a turnaround Tuesday. Maybe, just maybe, we're going to get a turnaround Tuesday. Folks, I very much hope you are faring better than I am. I hope you had a good day yesterday. I hope the overnight session didn't shock you as much as it did. But here's the TLDR of what happened around, I don't know, roughly midnight. China, in an official statement, vowed to fight until the end. So it's a very grandiose, very vague, very Chinese-sounding statement, but that's what it was. They vowed to fight until the end. The market said, what? What the fuck does that mean, man? And obviously, the overnight traders did not interpret it to be a positive one. But yeah, that's the TLDR. China vowing to fight until the end. Are they talking about the trade war? Are they talking about Taiwan? Are they talking about old school RuneScape? No one really knows because it's that vague of a statement, but it was vague enough to really mess with the market. So that's what's going on early this morning. Obviously, there's no crying in the casino. The party hasn't technically started. I'm not feeling good. There's a small chance that I'm somehow going to pull out a miraculous recovery, but I will tell you better at 4 p.m. today when we see how this plays out. So I hope you're doing better than me. I hope you're doing far better than me. But let me break down everything you should know for today. But I do want to remind you, especially if you're a person who pieces out early, maybe you're dropping your kids off at school, maybe you have something to do at work. Jerome Powell, the chairman of the Fed, is speaking at 12:20 ET today. During the lunch hour, Jerome Powell, the chairman of the Fed, is giving a public speech. That is something you gotta pay attention to. All right, let me do my job and show you guys what in the world is going on. Stock futures drop as selling resumes on Wall Street after a one-day bounce. China escalates U.S. trade fight with curbs on shipping. But here's really what happened. China says it will fight to the end if the U.S. wants a trade war. If you wish to negotiate, our door remains open. So right here, fight to the end. That is what the market didn't like. And as you can see, we got kind of hit. I mean, actually, look at this. Look at the 30-minute. It kind of all started around 0 o'clock, a.k.a. midnight, and we just got cracked. You could see that in the S&P 500. You could see it in the NASDAQ. But right around 0 o'clock, the market just started to puke. So not too good. Rare earth stocks rally in pre-market, extending gain amid renewed U.S.-China trade spat. Shares of U.S. rare earth miners jumped in pre-market today, Tuesday, extending a rally from the previous session. Critical metals, energy fuels, and NioCorp development were among those seen leading the gains. The moves came amid a renewed trade dispute between the world's two largest economies. So here's a little bit of an additional breakdown from Bloomberg. Let me make sure the volume is good.
So, Roz, we are seeing a tit for tat. Depending on where you look, it's either China's trying to escalate or de-escalate. And this FT interview really did have a lot of poking on the part of Treasury Secretary Scott Bessent. In your opinion, does this get ratcheted back?
Well, it's interesting because we are seeing, you're saying, a lot of posturing going on. So China and the US trying to get potentially in the strongest position going into this possible conversation between Xi Jinping and Donald Trump later this month in Asia. But it's quite risky business that they're doing because they are coming at each other in a variety of ways, not just rare earths, critical minerals, the tech space, but also, as we've seen now, shipping, just reflecting the extent of the tensions across the trade and economic relationship between these countries. And some of it may just be largely posturing. It may be trying to get in that position ahead of the meeting. But again, up until that meeting, Xi Jinping and Donald Trump both need to decide for themselves, does this meeting still make sense? Am I going to go into that meeting and come out of it with what I need, or is there risk here in even having that conversation? And so it's really about not getting to the point where this relationship gets so tense they decide not to meet at all. I mean, you heard the comments from Scott Bessent to the Financial Times saying that China is apparently hurting the global economy. So the message is that China's causing itself reputational damage, not just with the US and others. But in the same token, he's saying the lines of communication between the US and China are still open. He, in fact, plans to meet with the Chinese Vice President, He one more time, possibly this month, before a Xi and Trump sit down. So on the one hand, there's the tough talk that's going on and these actions that are happening. On the other, there's a sense that conversations are still going on, at least behind the scenes.
So right there, if that sounded confusing to you, of part of it sounds like it's escalating and other parts of it sounds like it's de-escalating, no, you are not wrong. You did not take your crazy pills today. Well, obviously, maybe you took your crazy pills today, but it was not, in fact, those crazy pills that makes you feel like this is crazy, because it is just straight up crazy. Some of the rhetoric is, hey, we're going to calm things down. It's going to be A-okay. It was a misunderstanding, and we're going to help each other out. The global economy, a little bit on tilt. We don't want to push it over the edge. The other part of the rhetoric is, hey, you, fuck you, pussy. We have some things to take care of, and we're going to meet you out back. So, and this is all happening within a couple hours. It's just all ping-ponging back and forth. So, obviously, whatever your bias is, you're probably going to end up focusing either on the positive or the negative, but it doesn't take much research to find positive or negative, seemingly diametrically opposed, but that's where we're at. One thing I can definitively tell you is someone is on the inside making a bunch of money. A historic crypto sell-off erased over $19 billion, but two accounts made $160 million. A timely bet raises eyebrows amid record crypto sell-off. So I know that we had actually CoffeeZilla. He was kind of pointing out some of the craziness over the weekend, and this is the hot news. People tracking certain wallets that made a lot of money between Friday and really Monday morning. But what if I were to tell you one of the biggest players yesterday in the entire recovery made another massive Bitcoin bet, and then when this news hit at midnight, obviously making even more money? I don't know who's doing this, but if it quacks like a duck, sounds like a duck, walks like a duck, flies like a duck, it's probably a duck. Now, is this intentionally? Is it like someone is intentionally giving out information from the administration? Maybe. Is it loose lips sink ships? Is someone just kind of herein and then they have a buddy who's a trader? Maybe. I don't know who's doing this, but we have seen a lot of evidence over this entire year of big bets being made right before pivotal administration announcements. Now, I have no evidence whatsoever at all to say it is directly Trump. It might be, it might not be. Obviously, I don't have evidence to the contrary of that. Is it related to just his administration, his friends? Is it related to his son? I don't know. But the timing of a lot of trades, and obviously these recent crypto trades would be an example, but throughout the entire year, we've been seeing a lot of like times where you're just like, really, a minute before an announcement was made, someone made a perfect bet? It's kind of sketchy, probably worthwhile to track, but I have to admit it does, especially when you're in my situation, unrealized down quite a bit right now. It feels like you're just getting kicked while you're down because like all this crazy stuff in no way to be predicted whatsoever. And it costs me a lot of money. And then someone else, obviously with inside information, is just making an absolute killing. It blows my mind, and I don't think it's going to be stopping anytime soon. But yes, I am in fact very, very jealous. So this is another interesting breakdown of, I actually recommend that everyone read this, just a little food for thought. We spent the last 10 months analyzing every single tariff development, and it basically is just an 11-step process. And they realized that, hey, in terms of this current dispute, we're kind of near the end. We're at step 9. China confirms working level talks with the U.S. regarding tariffs and export controls. Now, I should clarify, this came out at 9:20 last night, and then it was at midnight that we got some of the negative news from China. So I'm sure they're going to have some differing thoughts and opinions. But right here, over the next 2 to 4 weeks, various members of the Trump administration teased a trade deal, and then Trump announces a new trade deal, and the stock market hits a record high. So I was hoping that would actually happen this week, next week. It sounds like we're still on this pathway, but it might be more of a November-ish thing if we are just repeating how the previous discussions have happened and not. And up until this morning, when I saw what was going on in the futures market, I actually had hopes for the recovery being this week of like, okay, Trump and Xi, they'll meet, they'll talk, they'll kiss, they'll hug, it'll be perfect. But no, the recent commentary seems like it's going to get punted out a couple of weeks. On top of that, don't forget the U.S. government still shut down. U.S. shutdown threatens to erode quality of important inflation data. Just so you know, right now, Polymarket is 99.5% confident that this shutdown will go past tomorrow, October the 15th. And if you look on Kohrs, the expectation for how long it will be just keeps rising. Right now, Kohrs is betting for 35.5 days. So basically, we are going into November. But coming back to what that article was referring to, there is a very real legitimate chance. Well, they already actually took it off the list. Initial jobless claims, supposed to get it Thursday, no longer on the list. Non-farm payrolls, it's there. They're probably going to remove it. We're probably not going to get it. CPI, PPI, maybe, probably not. So these are all things that are in flux, and we're just not going to be getting job numbers. We're not going to get inflation numbers. So this list is very, very dynamic. But what I do want to let you know is definitively going down today at 12:20. Fed Chair Powell will be speaking. That is today, Tuesday, October the 14th. The chairman of the Fed speaking midday. Probably should pay attention to that. With respect to individual equities, we are officially back in earnings season, and it all got rocking with BlackRock, JP Morgan, Goldman Sachs, Citi, Wells Fargo, and Johnson & Johnson. I do want to remind you tomorrow, ASML and Bank of America and Morgan Stanley and United. Thursday, TSMC, and then Friday, maybe you're paying attention to American Express. But rewinding to what we had today, JP Morgan Chase tops estimates on better than expected trading and investment banking results, but the last time I checked, it is red in pre-market. Goldman Sachs beats estimates on better than expected investment banking and bond trading, same thing, red in pre-market. Wells Fargo tops profit estimates, raises return target after asset cap lifted. Citi reported a rise in earnings with every business posting record third quarter revenue. So across the board, the financial sector is looking pretty good. Obviously, pre-market is still a bit red in a general sense. But in terms of where did they land with respect to what Wall Street was expecting, well, they ended up beating. Moving a little bit over to pharmaceuticals, J&J, Johnson & Johnson Q3 double beat. So thus far, and I know we just started earnings season, in terms of the major companies that most of us are paying attention to, it is beats across the board. Now, obviously, as of this moment, that's not translating quite yet to, oh, okay, like the market's actually going up. And I know that's a frustrating thing, but one of the biggest things, especially if you're new to the market, just because you beat earnings doesn't mean you're going up. Just because you miss on earnings doesn't mean you're going down. So I know a lot of people try to predict earnings, and I always question why, because really what you're attempting to do is predict if the stock's going up or down, and beating or missing earnings isn't necessarily correlated with the stock going up or down. So I know that's a common question I get, oh, do you think they're going to beat? And I mean, if you're right, you're right, but it's not like you get a special medal for that. It's more of, did you get the stock movement right? And that isn't always necessarily correlated. And recently, quite a bit of it has to do with the forward-looking guidance. One other individual equity, even though it didn't have earnings, we got news on Oracle Cloud to deploy 50,000 AMD AI chips, signaling a new NVIDIA competition. So Oracle and AMD making moves, and it feels like we're at the point right now where every single day we get a big new announcement related to the world of semiconductors and AI and hyperscaling. So something to pay attention to, but that is some other news that if you're in here paying attention to Oracle, AMD, or NVIDIA, something you might want to be mindful of. If you haven't already, don't forget to sign up for the newsletter. It is 100% free. You've never had to pay for it. You're never going to have to pay for it. It is 100% free. Every single Sunday around 10 a.m. to your email inbox, you're going to get a breakdown of what's going on in the market, cheat sheet for earnings, cheat sheet for the major macroeconomic events, and probably most useful is the seasonality of each individual day. Yesterday was leaning bullish. We had a nice bullish recovery. Today is also bullish. Over the past 27 years worth of data, the better part of 3 decades, the bulls have won this day 61% of the time, as in they have an 11% edge. The profit factor is 1.75. The bias is obviously bullish. And here's a look at the hypothetical equity curve you would have if you bought it open, sold at close on the S&P 500 futures market. For many, many years, this was just a clear climb to the upside. Yeah, you had some years that were a large win, some years that were a large loss, but overall, this day does shape up to be bullish. Is that a guarantee? No, I'm giving you the odds right there, but I just want you to know about seasonality. Tomorrow is a bit more neutral. It was bullish, bearish, bullish, so it nets out to being a little bit more neutral. Thursday is a bit more bullish, and Friday is leaning bearish. So once again, you could get this for absolutely free. Just wanted to call that out. Also, before the market opens, shout out to Apex. This deal ends in 2 days. 80% off with that code Goonie. And on top of that, you can get the lifetime upgrade fee from eval to performance for dirt cheap right now. So that's a specialty deal that they're currently running, and it ends in 2 days. Don't forget to use that code Goonie. And also shout out to Spot Gamma. We are the only community on God's green earth that they give 80% off to. And that's the tool I use to see what's going on in the market, track the flow. This is all Spot Gamma. So it's all pinned to the top of chat. It's in the description of the video, but obviously shout out to Spot Gamma, shout out to Apex, more on them a little bit later. And really, I should show you what's going on in the world of Apex. And as you can see on the screen, we are clearly in negative gamma. Remember, negative gamma, when you see a bunch of red here, that is not bullish, that is not bearish. It means expect large ranges. It means when we get going in either direction, really expect it to keep going in that direction. It is slippery price action. You could also see from the net OI that Captain Condor is back. The call credit spread is up here at 6685. The put credit spread is down here at 6605. Remember, this Iron Condor is a bet that we conclude the day somewhere within these bounds. They want it up, but not above this, and they want it down, but not below this. As of right now, technically it is getting blown out, but obviously the market hasn't even opened yet. So I do want to call out 2 specific things. First of all, Captain Condor is back. Once again, call credit spread is at 6685, and then we also have 6605, and someone does have a lot of long calls at 6675. I want to call that out as well, but that wasn't really what I was thinking of. The other thing I was thinking of is the gap fills. We currently have an upside gap fill on the SPY and on the Qs. Yesterday, the SPY had a low value of 659.77. That is $2.60 to the upside from where we currently are. Once again, upside gap fill, hitting the low from yesterday. Same thing on the Qs. we have another upside gap fill, which is 597.23. Are these guarantees to hit today? No, but the odds are really, really high. There's an upside gap fill on the SPY, there's an upside gap fill on the Qs, and Captain Condor is in play with a lot of negative gamma. So for my day traders, for my scalp traders, those are all things obviously you should be considering, and I wouldn't be doing my job without calling out the fact that vol is once again kind of spiking. Yesterday, I was talking quite a bit about this concept of a Vanna rally. For that to happen, you need vol to die. The way we were kind of dying in here, you need that to happen again, and it actually needs to drop all the way back down. If vol keeps spiking, most likely that will favor the bears. Is it a guarantee? Absolutely not. There's nothing such as a guarantee in the market, but those are things you definitely need to consider. All right, to get more specific, these are all the key levels I'm watching today. Let me kind of zoom in here. As I always do, I mark out the previous trading session's high, low, and close. That is the green, the red, and the white. Those are important psychological levels. Those are important reaction levels. It's always good to know those. The other thing you're going to see is this white box. That's the transition zone. It's considered to be bullish above, bearish below, and this is basically based on the current gamma structure, how the market makers are going to be perceiving the market and how they have to balance out their books. What that gets really mathematical nerdy. What you need to know is bullish above, bearish below, choppy within. And then the final thing are these yellow horizontal lines. Those are basically just where we see big open interest levels, as in a lot of people playing those strikes, and they happen in corners like most of the time. A lot of people like to play the major psychological levels. It's no surprise that there's a lot of open interest at 6,600, at 6,500, at 6,700. People like to play those nice round values. 6,550, that, well, not only is it psychological, but it's that low that we saw on Friday. So these are the levels I'm watching throughout the day. As of right now, we are scheduled to open around 6,593. So that would be putting us right roughly where my cursor is, just on the south side of the transition zone, just barely into the I suppose the bearish territory. You could argue on the intraday chart, SPX kind of has this downside gap fill-ish to 6582, which is near the support at 6580. Maybe they want to clean that up and then bounce it all the way back up to 6654 to hit that closing value. And then there is a upside gap fill to 6621. So those are all things that are very, very important to be paying attention to, just from the perception of psychology, technicals, and options flow and major open interest levels. So I want to call that out to everyone. In my book, when we take a step back and we look at the daily chart, I think we very much have a shot at a recovery as long as we hold this Friday low. Right now, things are not looking the best. We're roughly where my cursor is, so we're a lot closer to breaking down than we are bouncing. Obviously, I'm well aware of the odds of the upside gap fill. I'd feel a little bit better about that, but I really, really want to hold this Friday low because not only is it going to be just a technical support, but it's also roughly aligning with that 50 EMA, and I, for one, very much know of many, many bot systems that are bullish above the 50 EMA, bearish below. So that might bring on a whole new aspect of selling. I also want to remind you that even though we're talking about options flow and technicals and this and that, the other thing, please remember that as of Friday, we are back in the mode of kind of it all mattering less because we're being driven by headlines now. The sell-off on Friday, the pop yesterday, and then now the new sell-off this morning is all because of headlines. It has nothing to do with really any technical development. I guess you could argue it's all psychological, but it's not the economy getting reports, doing better, doing worse. It's all headlines, which, if you ask me, is kind of the worst time to be a trader, because unless you have a particular edge in the world of headlines, it's just, are you going to be on the right side or are you going to be on the wrong side? So if I had a crystal ball, I would definitively tell you guys where this is going, but I do not. I wish I did. My account wouldn't look as bad as it does right now. But right now, it's just, we're in one of those brutal phases of technicals not mattering as much, options not mattering as much. We just got tilted into negative gamma, and every single bar is going to just be a wild ride. That's pretty much where we are at. All right, let me get this ready for the day. Let me switch this up. Let me switch this up. Let me switch this up. What do you guys want to watch this morning? Oracle had a little bit of news. What else do we have? What's moving in pre-market? Everything is red. Every single thing is red. Well, that is not fun. Bitcoin's at 110. All right, we're going to see how this shapes up. Let me switch up the screen so you guys can see what is what. As you can see, I passed all those accounts yesterday. The eval accounts went obviously on PA right now, so that's why they're restarted at 50K, because that's what happens when you pass the test. I still have 2 of these larger accounts that I'm just running some strategies on, and then as you guys kind of saw yesterday, I am also in the background working on a new video where I need to take the 10-minute orbo breakout every single day, so obviously I will be doing that once again today. I just want to make sure I'm on the right account. I am. So on this account, on 8033, remind me if the time is getting close that I very much need to be taking that 10-minute orbo breakout. Very much need to be taking that trade today. All right, so let's get rocking. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. Well, that is not the start I wanted to see. All right, this sucks. Here we are. We are on the south side of the transition zone. There is a little bit of a downside gap fill, and we do have some support at 5580. Obviously, it's just this open interest level. You could see it better here on the GEX, but we'll see this 5580. The put credit spread, the lower bound of the Captain Condor today, this Iron Condor, is at 6605. So they're actually looking for a recovery all the way back up to where my cursor is right now. They want it all the way up here at minimum. So let's see how this shapes out. Of course, let me reload this. We are very much in negative gamma. So don't be surprised if we have larger ranges similar to yesterday, but pretty much the opposite of what we've been seeing recently. We've had weeks now where it was just a lot of positive gamma and we were barely moving, and we are in completely different modes. But the major thing I need to call out to you, especially if you're new and maybe you haven't heard of this concept before, is even though it's not guaranteed, we have a high odds chance of trading all the way up to 659.77. It's an upside gap fill. No, I did not come up with the concept. It is a well-known trading concept of when an indice has this large of a gap, a lot of people like to basically test this untested area of supply and demand. Is it a guarantee? Is it a rule? Is it a law? Is it a regulation that it gets filled? Absolutely not. That's not how it works, but it is high odds. Like any form of data crunching and statistical analysis will tell you, if you play this time and time again, that's actually going to be a profitable trade. Sometimes the size of the gap has implications. Sometimes if it's news driven or not has implications. So I just want to call that out, especially if you decide to research it yourself. Maybe that's something you want to dive into, add a couple filters here and there. But I could tell you that is one of the major things I'm looking for. The SPY and the QQQ upside gap fill. Technically, you could see it in SPX as well. That would be, once again, it's just all to yesterday's low value, 6620, 6621. So you can see it on SPX. You could see it on SPY, you could see it on QQQ, you could see it on NDX, you could see it. Nope, it is not on the Russell. The Russell does not have a gap fill because we are not, we did at open, but it already quickly filled it. Interesting. All right, let's give it a break. Let's just see. Ooh, Mag 7 getting hit out of the gate. S&P 500 actually trying to recover a little bit out of the gate. Obviously, that's only about, 3 minutes worth of data, 3 minutes worth of information. So it's not necessarily the end all be all, but I would have had a much easier time in my life if it had all just been a rocket from the get-go. But maybe this is just shaking out some of the weak hands and we can recover. And it probably sounds like I'm being biased right now. And it is because I'm being biased, because I have a lot of money on the bullish recovery that I just got completely boned on overnight at midnight when China vowed to fight until the end. No one knows what it means, but the market interpreted it to be absolutely horrible. And that is currently why you are seeing this bloodbath of red above my head. The only thing that is green is volatility, which is now at 22. Golly. Wow. Look at all that red. Holy shit. It's just so frustrating because eventually this is going to shape up to be an amazing dip buy opportunity. The hard part of that particular question is just when. Was it yesterday? Is it today? Is it next week? Is it next month? But overall, this is going to be a great dip buy opportunity for sure. I'm hyper confident about that. It's just a question of when. We gotta wait, see how things shape up. Days like this, especially when just like there's, in a general sense, I don't like trading this early in the day. And in environments like this, I really don't, just because you have all of the reactions to people seeing the market open situation. And that's where we're at right now. So I'm hoping we can catch our legs here. We are at support. I would love a bounce here. If we don't bounce here, my next target would be all the way down here at 6550, which is also that low from Friday. And in all reality, I'm not sure how much pain I could personally take past that level. There's certain points of being a degenerate, but maybe you have like, I don't know, somewhat of a good thesis. And then there's a point where you just tilt into being completely stupid. And for me, it's probably around there. I don't even know if I want to look at my account right now. This is getting bad. Look at the Mag 7. The Mag 7's delta is just nothing. It had 5 seconds, and then within 5 seconds, the orders just started smashing. Look at that. Calls being sold, puts being bought, no breather. Dude, that is just such a perfect linear line. Barely jagged whatsoever. This is just bots unloading. They are just selling in perfect increments to get out of whatever positions they are currently in. S&P 500 showing a little bit of hope. A little bit of hope, but price is just not good. Jesus, dude, this is getting bad. Well, we snapped the support at 80. There were some long puts coming into today targeting this level. And the reason it was marked out is because when they go from out of the money to in the money, a lot of times people end up locking in their profits. And that's why you have to watch for a potential reaction there. And we found a little bit of support. It held for a second. And then they said, nope, we're still going down. Fuck, dude. This is just brutal. Absolutely brutal. Let's see. If you're just joining in right now, first of all, shout out to Apex, 80% off with that code Goonie. And also you could use that link for Spot Gamma to track the options flow the way I do. Those are both pinned to the top of chat in the description of the video. But more importantly, if you're here today, there's a couple things you need to be mindful of. Captain Condor is back in play. There are upside gap fills, and Jerome Powell is speaking at 12:20. Those are all three things that are very, very, very important for you to be mindful of today. Upside gap fills, Captain Condor is playing, and Jerome Powell, the chairman of the Fed, is speaking at 12:20. Jesus, dude. All right, we just made a fresh low right here on NQ. We took out that pre-market low that we saw around 7 in the morning. So there might be a reaction here. Remember, whenever it comes, I deeply believe the world of active trading is not trying to predict breakdowns or breakouts. It's trying to identify key levels and then watching how the market reacts to it to see if you could get in for a low risk opportunity. So right here, we're at a key level. This is the pre-market low. The question is, are we going to bounce right out of it? Or are we going to do one of these things? We puke, we come back up, we get rejected, and then we waterfall all day. I think that's a much better framework to attack the market with. And I know that's very different than everyone else that you're going to hear from. Everyone else in this space seemingly tells you that there is a way to predict what's about to happen. And I've never heard anything more dumb and idiotic in my life. Imagine saying, yeah, I have a model that predicts, and then we're in situations where China puts out like random statements. No way. Like, shut up. That's the dumbest shit I've ever heard. No one can predict. Inherently predicting means that you know exactly what the entire cohort of traders are about to do, as in everyone who might about to buy or sell or fat finger or have good code or bad code or this or that. It's so silly. It's so incredibly silly to think that anyone can predict. And obviously explaining it that way, I hope that resonates with some of you, but think about it this way. If anyone was really that good at predicting, do you think they would tell you how to do it? Do you think they would share that secret? Because inherently, the more people that know it, that means that that edge disappears. So even if it existed, it would not be publicly available information. But it doesn't exist because remember, the next bar, the next trade is all dependent on what people are about to do. All retail traders, hedge funds, market makers, high frequency traders, the next bar, the next trades are all about that entire group. What are they about to do? And unless you know in the net situation, are they all buying or are they all selling? You just don't know. You just don't know. Oh, thank you for reminding me about that orbo. Thank you. All right, let me get this set up. Oh. Oops, shit. Thank you.
Order submitted.
Why is my mouse? Uh, bu- 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 67. And I could set it up on the other side as well.
Order submitted.
All right, did I do that right? What's the low here? The low is 70.5. I have a pending short order at 70.25. And then this needs to go to 67. All right, so that's for that. And then, in case, is it even going to recover? I could set up the orders for the other side just in case that breakout happens. I guess I'm giving it a second. Whatever. What is the high? The high is 41.5, so 41.75.
Order submitted.
42, 45, 40, 45.
Order submitted.
Okay. Well, the orders are there. They're ready. Obviously, it looks like it's going to be more of a breakdown trade than anything else, but just in case. So I have pending orders to get in, one tick above the high and one tick below the orbo. The orbo is a trading concept, the opening range breakout. So your opening range is whatever time frame you care about, the 1 minute, the 3 minute, the 5 minute, the 10 minute, the 30 minute, whatever time frame you care about. It's that first bar of the day. So right here is the first 10-minute bar of the day, the 10-minute orbo. The 10-minute orbo trade would either be taking the breakout or the breakout down based on whichever way it goes. And as you're about to see, we're getting close to the breakdown. We're getting close.
Orders.
It already.
Orders
what
submitted.
the fuck was that?
Target filled.
All right. Well, the one that's highlighted was the actual orbo trade. As you can see, my Icarus took the trade as well. But right here, the one that's highlighted, $80. That's the one on the screen. It got short at 68 and it got a fill at 67. So it actually got a really bad fill because wasn't it supposed to be at 70 something? So there was a point or two of slippage, but anyway, and actually 67 was the right fill, but whatever. All right. So that one hit. Let me kill these other orders.
Order canceled.
So I just want to explain what the orbo trade is. And we put a video out on it, better explaining some of the math stats and figures to it yesterday. That came out. Feel free to check it out. And it's kind of interesting. Trading it out of the gate by itself, probably not the best idea. But however, if you start to add in a couple other filters such as EMA, the linear regression of EMA, if you have a daily just trend of I only want the bullish or bearish one, it can be made into a very good strategy. But just taking every single orbo trade every day, not considering anything else, if you go for anything more than 3 points, it's going to be a net loser. I back tested it on the for 5 points, 10 points, and 20 points. And for both the bullish and the bearish direction, it is a net loser. Over the course of the year, going for 3 points is a net winner. But like I said, I still wouldn't even trade that one out of the gate. just because you can make it far, far better by basically skipping some trades and then on other trades playing it a bit bigger and swinging a bit larger. So instead of just saying, hey, I'm taking the breakout breakdown and going for X amount of points, all of a sudden, if your target's based on ATR, all of a sudden, if you're using EMA filters, RSI filters, MACD filters, daily bar filters, you can improve it a lot by when the odds and the conditions are good, swinging harder, and then when they're bad, not playing at all. So this was obviously day 2. We did a day yesterday, so I've only have 2 days worth of trades, but it's right here up $235, and that's going to be the only trade of the day. Basically, I'm trying to keep this account clean and only play the 10-minute orbo, and obviously I'm doing this for a video that'll come out in the future where I could kind of explain what's going on. For whatever reason, Icarus also decided to take that trade. You could see I made anywhere between $70 and $97 per account. On some of these other ones, it played it a bit larger, 225, 225, and 350, so it looks like while some of these, I guess, were the unfortunate losers when compared to slippage, other ones actually benefited from slippage. And slippage is very quickly becoming the bane of my existence, but hey, it is what it is. And it's frustrating to me that I can have this slippage when I'm running all the strategies independently now on each account. So it's just something with the time. So I don't know. It's frustrating. It is what it is. And I guess, like I've been saying a lot more recently, there's no crying in the casino. No crying in the casino. So there's still going to be trades here today. We're going to hear it popping off, this, that, the other thing, but let's see. All right, the SPY is coming dangerously close to breaking down from that Friday low, which is exactly what I just said. That is a danger level. So we're watching 653. That is no bueno, Batman. That is no bueno whatsoever. So we try to hold this support at 6580. We puked, we bounced, we didn't even hit it. We puked again. Obviously, there is going to be support here at 6550. The question is it going to hold? Obviously, if we could get above 6,600, we might get sucked into this transition zone. As a bull, that's what you're looking for. But obviously, looking at price action thus far today and looking at the Mag 7 flow today, it is not good. I am praying for a 10 a.m. reversal. Fuck, I'm even paying for a 9:45 reversal. I don't even really care when the reversal comes. I just want the reversal to actually come at some point. So right now, based on trend, clearly on the 1 minute, the bears are in control. We have lower highs and lower lows. For the bulls to have a shot, you would first need to take out 655.6 on the SPY, and you'd have on the Qs to take out 592.66. So those levels would have to be taken out, because at least you would have a higher high then from there you'd compare the low wherever the next low is, and maybe you're setting up for a shoulder, head, shoulder. That's totally possible, but you could even see it here. Look at the Mag 7. This was a big system selling, and it took 10 minutes from 9:30 to 9:40. This was a perfect linear drop in delta. That was someone with size unloading. They were getting out of their calls. Actually, they were getting out of their longer dated calls for the first 12 minutes, and then it sped up, and it actually took 15 minutes. And there was put purchasing up for the first 10. I mean, but that is a perfect linear move. Then it went flat, then someone smashed it again, and hopefully that sell bot is now done. Whoever was rebalancing or doing whatever they needed to with their portfolio, hopefully that was the end of that, and maybe we could get a bit of recovery. Maybe, but I have this, I mean, I'm just looking, the only thing green is the VIX. VIX is just ripping. It's up 17.7%. Everything else is brutally red. If we do have a recovery, it's going to be a fucking miracle at this point. Oh, someone threw on a different... Oh, hang on. We got a big shift. This is new. This was not there this morning. Someone just threw on another put credit spread, adding a little bit of positive gamma to this system at 6545. Basically, they're throwing protection onto that low from Friday. So it's technically just below it. It's right here. But that is a little bit of downside support. And it is a huge position. It is 15,000 contracts. So that's another PCS, another put credit spread. So not only did we see that as a psychological level from Friday, but now we actually, from a market making perspective, actually have a bit of gamma support, and that is that green node right above my fat forehead. All right, the Russell trying to bounce a little bit, vol coming down. Vol, like you need vol to almost crack 20 to have a shot here. But from an intraday perspective, I'm watching this 939 high. I am watching this 939 high. Oh, how are we doing? So the only thing I've done today are these trades. You can see I've made about $2,000, maybe $2,500. So not bad. I'm not going to complain about making a little bit of money somewhere, especially when everything else is just getting absolutely rocked. Just kind of explaining that orbo trade. And then obviously I was doing some other stuff. Icarus here, taking advantage of certain scaling out techniques. But the Icarus is going to keep running. As long as it sees the setup that it likes, it will keep trading. In fact, what times? Yeah, actually on Tuesdays, Icarus is allowed to trade quite a bit between 10 and 11. Quite a bit. So if the setup is there, so Icarus turns on and off at what's perceived to be better trading times, and that information just comes from like pretty rudimentary data mining. But on Tuesdays, the 10 a.m. hour is a good hour to be a trend following trader. So once again, specifically on Tuesdays, based on the last 1 to 3 years worth of information, Tuesdays from 10 to 11, it is good to be trend following. We don't see much mean reversion in the 10 a.m. hour on Tuesdays over the last 1 to 3 years worth of information, with a special emphasis on the last year worth of information. So if you want to use that information, congrats, use it. If you don't want to use it, don't use it. I'm just letting you know some of the nerdy ass stats, facts, and figures of the market, at least how it's been over roughly the past year. Vol. You want vol to come down. The Russell, small cap is actually fighting back decently well. It's down the least right now. It's still red, but it's down the least. I am very curious about this position, these giant blue bars. Once again, this is a put credit spread, adding positive gamma to the system. That is support. If this cracks, that could get painful. That could actually get pretty fucking painful. Is it going to crack though? Remember, the point of predicting it is useless, because whether we do or don't crack, that's dependent on, are people about to come in and aggressively buy or sell? Unless you know what everyone in the market's about to do, you're not going to be able to accurately predict it. But what we can do is identify it as a key level and watch it. If we get there, are we going to bounce? If we get there, are we still going to sell? If we get there, whether bullish or bearish off of that pivot level, can you get in with a low risk opportunity? That's the name of the game. We're actually, not that I'm the biggest fan of technicals on a 1 minute chart. It does look like we're setting up for a shoulder, head, shoulder. Obviously, the entry would be the snap of the neckline. And in this case, the snap of the neckline would be 6577. And technically, you would do a measured move. And the measured move would bring us up to 6599. We'll call it 98.5. So from a purely textbook definition of how you play head and shoulders, in this case, it's inverse head and shoulders. On the neckline, you're supposed to go for the measured move from the neckline to the head. So obviously I marked that out, and that would bring us up actually to the bottom of the transition. Honestly, this might end up being a really good trade today. This neckline snap playing it up to 6598. It's 1-to-1, which your risk and your reward would be the same, but there are some data points suggesting that head and shoulders from technical patterns is actually the most accurate, and it works in the low 80s. It has about an 83-ish percent hit rate. I've got about 200K. Is there any sense in investing it all over the next couple of days or all at once? Mostly going momentum funds, growth-oriented ETFs will be long-term holds. No, I in my opinion, no. We just got the snap of that neckline. So if you're playing it, it would be a play up to 98, 99. In my opinion, that sounds a little bit emotional, of like you're seeing one red day and you're like, oh, should I punt it all in? When it comes to long-term investing, I find that dollar cost averaging is the best. Maybe you find certain equities you like that are having a larger drop, and maybe you want to put some extra dollars in there. But remember, calm, cool, collected. It is people who remain calm throughout these types of moments, whether it's extreme bullishness or bearishness, that end up doing the best. Don't let emotions lead your way. Pay attention to the key levels, pay attention to the news, and play it from there. So, for example, when we had that big dip in April, just because we were down, I wasn't buying because I was like, hang on, we don't have the news yet. But then as soon as it became clear that basically Trump was done with that phase of the trade war on whatever that day was in mid-April, I put a big chunk in. And then for the couple weeks after that, I kept adding a little by little by little. So I don't think you necessarily have to split it up perfectly. So you said you had 200K. So it's not like you don't have to do like 10 different bullets of 20K each. So maybe when you think things are extreme, well, maybe that's half of it. And then the other half of it, you could dollar cost average. Remember, it's okay to mix and match. That's completely acceptable. But anyway, we do now have a higher low and a higher high. So right here, 951 is a higher low relative to 945, 944. And the fact that we took out the 939 high, we are potentially switching from bearish to bullish. This is a bearish trend. It's really easy to define. Lower highs and lower lows. Now, all of a sudden, okay, interesting. We put in a higher low, but where's the next high going to be? Well, looks like it was actually higher. So there was like this intermediate phase in here where we're like, okay, that's a lower high, but this is a higher low. Like, which way is it going to break? And it ended up breaking to the upside. So now we officially have a higher low and a higher high. So we went from bearish to bullish. Obviously, this can change on a moment's notice, but I'm just trying to teach you like basic measurable ways to look at this. And also, fortunately for us, vol is crashing. Well, I shouldn't say crashing. That's not fair. It's still up 14.9%. It is coming down. It's at least no longer at 23. It's down sub 22. And I actually want to see it get below 20. So it's not fair for me to say vol is crashing. That's hyperbolic. And I don't want anyone to get too jazzed, but I need a fucking miracle here, folks. Okay. Like I said, if you took that shoulder, head, shoulder, I still like it. I think that's going to work well. The target was 98.5. You could just target 99, and that's the start of this transition zone. And we get in there, then we have ideally the shot at the upside gap fill. Yeah, the upside gap fill is 6621 right here. It's this white line. That would be a reach target. So you could actually, if you took the head and shoulders, this is kind of combining two different trading techniques, but you could scale out one here at that measured target, move your stop to break even, and then see if you could ride the other one to the upside gap fill. That's another interesting technique you could use on a day like this. So that's kind of like my whole concept of measured target, stop to break even, and then you have a free runner. If you're wrong, you get knocked out at break even. If you're right, great, your runner ran. That's awesome. I would not be touching calls today. I think that's a poor piece of advice. On any given day, you have 50-50. Like if you look at the 1 minute chart, the 10-minute chart, the daily chart, it's about a 50-50 split. In fact, the only thing that has a little bit of a skew away from 50-50 is the daily chart, which is bullish 54% of the time, i.e. bearish 46. But this idea of I wouldn't be touching calls, how do you know? Why would you say that? You don't know. What if it comes out that Trump's like, yep, nope, everything is now ironed out with China? What if China comes out and says, yeah, no, we didn't mean that we're going to fight to the end. We were talking about something else. What if all of a sudden vol collapses and we see a Vanna rally? What if someone buys a bunch of zero DT calls and they're just buying it all the way back up and buying the dip? What if that Bitcoin short gets out? My point is that this idea of like, I'm not doing that. That is still in the realm of attempting to predict. You are stating that you are not buying calls because of some general prediction of what you think is going on, and you should not be predicting. In the game of active trading, day trading, somewhat swing trading, but really day trading and scalp trading, it's just a game of reaction. Mark out the key levels, set alerts, and then react to those key levels accordingly when we get to those key levels. Don't come in saying today has to be bullish. Today has to be bearish. I'm not doing this. I'm not doing that. Well, the thing you shouldn't be doing is breaking your trading rules. And what you should be doing is always discipline. That's the thing that's going to carry through for every single day. But beyond that, like when it comes into being a bullish or bearish, when you have a rigid mindset like that of no way am I going to be bullish, no way am I going to be bearish, that means inherently that you are not open to taking in new information. And as we saw on Friday and yesterday and now today, the entire dynamic of the market can change rapidly. You have to always, like, whenever you're in a position, and like, I'm the first to admit that, like, sometimes I'm really good at this and other times I'm like really, really piss poor at this. You have to just always be like, what is the other side thinking? Let's say you had a bullish position. You always have to be saying, what is the bear? What are they looking for right now? And as maybe some of it comes to fruition, you have to say, like, okay, is it legitimately here? Is it time to get out of my position? And obviously that works both ways. Whenever you're in a position, just ask yourself, what's the other side looking for? If you took a trade on the other side, would you be happy? Would you not be happy? Where would you be concerned? You always have to be considering both cases. I think that's a much healthier way to get into this. Dude can't even talk, tripping over his own words. What do you mean? I actually think I'm like one of the better speakers in the streaming space. In fact, I know I am. Yep, and uncertainty does what to the market? Well, market doesn't like uncertainty, but on the flip side, when uncertainty is interjected into the market, eventually it dissipates, and then we see those pops. So this has been a common thread that we've seen ever since March, April, was this whole trade war thing prompted a lot of uncertainty. Then when we got clarity, we actually saw a huge pop. So at first, it's not good. But then when you remove it, especially when some of them are like a little bit more predictable, and that, like, I guess it goes into this concept of like the taco trade. It then pops. Matt, I didn't tune in yesterday, but did you see CoffeeZillow's video about insider trading on Friday? Yeah. I didn't see the video. I saw stuff on Twitter about it. I was reading about it last night and early this morning. And it seems as if that was all trades executed over the weekend. And then there was more stuff coming out late last night, early this morning that kind of was aligned with this drop off that we just saw around midnight last night of someone with very easily trackable crypto wallets just making a killing. I am hesitant to say it's insider trading because you kind of have to prove it. It seems suspect for sure. I'm not saying it doesn't seem suspect, but for it to be insider trading, how do we know it's not just luck? Like there's a non-0% chance that it's just absurd luck. And they're like, nope, I'm betting a lot of money that the situation's going to get worse. And they seemingly bet right. But I do admit, it seems as if it's insider trading because we're seeing a succession of just really appropriately timed trades. Why is AMC moving? Literally no one gives a shit about that stock. If you're still talking about AMC in 2025, you're wasting your own time. There's just better opportunity. There's better movement. There's better things going on in the sphere of trading and investing in AMC. It is absolute bullshit. Like you're just wasting your time. Remember, in the world of trading, there's a concept referred to as capital efficiency. We all have a finite amount of capital, as in you should be deploying your capital where you perceive to have the best odds, the best opportunity. And if you in any manner think in the modern era, in October 2025, that AMC is a top tier opportunity, that's stupid. Like legitimately dumb of you to think that that is like some incredible opportunity. It's just simply not. All right, Mag 7 is flat after vomiting. S&P 500 is attempting to pick up ever since 9:45. We got a nice pop. We're flat, and we're really just kind of dancing around this next technical, psychological, and open interest level at 6,600. I do want to remind you that there is a put credit spread at 6,605, and there's a giant one right where we bounced today at 6,545. What time did that trade actually get put on? Oh, it got put on within the first 10 minutes of the day. So somewhere between 9:30 and 9:40, they got into this position, which was most likely right here. See how the light blue line, which is 0 DT puts, did a completely different move than the longer duration puts? That was most likely the creation of the put credit spread right here. See how the light blue 0 DT puts did a completely different thing than the dark blue all puts put together. Well, we know it's a 0 DT position. We know it's expiring today. We know it's created in the first 10 minutes. And that deviation right here, light blue versus dark blue, those are both puts. That was, I mean, just you can map it out. It's not that difficult. You could see, especially because it's so sizable. It's 15,000 contracts. 15,000 contracts. That was definitely what was happening. And now let me fast forward to not freak anyone out because we are getting that bounce up to the put wall. So hopefully that acts as support. The spot gamma implied 1 day move high is around 6635. The close was around 6650. There's a hedge wall that's 6670, and there's a giant gamma strike at 6700. So some things to consider. I think those upper targets are maybe on my part some visions of grandeur, but we're going to see. Remember, did we hit that one target yet over here? Okay, if you took the head and shoulders, congrats. We called it out perfectly. Rewind the stream. Not only did we explain the concept, but it just hit. At this point, if I took that trade, which was at 953 off the head and shoulders, I would be locking in some, setting the stop to break even on the others, and then I would be targeting 6621, 6620.71 to be specific, the upside gap fill. And that could be your play of the day. Very, very easy. Very, very easy. You would be in at all the way down here at 7.7. Your initial risk would have been either 6.4 or 5.6. You got filled on one. Stop is now to break even. Your runners, you're risking nothing on, and your target is here. And depending on your size, you could scale out even more there. And if you still have some left over, go for 6.650, depending on obviously the size of your initial trade and how many either longs you have, whether it's for calls, whether it's on ES, whether it's on NQ, whatever it is. But that worked out really, really well. So at this point, had I played that, which I'm not because I'm trying to do this all robotically, I'm trying to just let Icarus do Icarus things. If I manually traded that, I would definitively have the stop to break even. I would no longer be risking anything else. No longer risking anything else. Upside gap fill. Yeah, I've been calling that out all day. Upside gap fill 659.77 on SPY, and it is 597.23 on QQQ. Without a doubt, calling those out. And you have to be mindful of the Captain Condor that's in play. And then there's a new, larger put credit spread that's all the way down here. But this put credit spread and this call credit spread, that was the original Captain Condor of the day. You got to be mindful of that stuff. And you should also be mindful of the fact that Jerome Powell, the chairman of the Fed, will be speaking at 12:20 today. 12:20. See how we just tapped this pre-market low? Nope. Back up. This is interesting. Look for NQ in the recovery to get above 665 because that would be a fresh high right here on the 10-minute chart. The whole overnight session, lower highs, lower lows. You could easily see that with all these green and red carrots. This is called Williams fractals. It's a free indicator. Anyone with TradingView can get this. If you just want to have something that quickly colors the relative highs and lows for you. Once again, it is free. I'm in no way associated with it. It's just I get that question a lot, and I figure it's a very easy visual tool to be like, oh, the lows are getting lower. The highs are getting lower. So anyway, I'm looking at 1, 2, 3 highs right here. If we could take out 665, all right, awesome. Then maybe from there, we have an opportunity to take out the next major high at 24,749. So kind of watching these levels. Obviously, I'm watching 6,600. I'm watching 6,621, the upside gap fill. Various things to pay attention to. The Russell, it was down 1% this morning. It's now down 0.5. So the Russell, the small cap sector, is really making a fight to potentially get back to green on the day. And that is all happening as VIX, the volatility of the S&P 500, is coming down from 23 all the way down to 21.6. I just want to see it keep dropping. I want to, ideally, we get it below 20 today. That would make me feel a lot more comfortable about life. All right, we did pass the 10 a.m. hour. Hopefully we don't see the 10 a.m. I guess we talk about the 10 a.m. reversal, but what would the reversal today be? Would we be reversing this pop, or would we be reversing the overnight sell-off? So I guess no matter how you slice it up, you could argue that it either is simultaneously a reversal or not a reversal, because this pump wildly different than the overnight session. But anyway, the Mag 7 puked until about 9:53. It's been flat ever since then. And then the S&P 500 actually just hit a delta high of the day at 10:05. It's kind of a little flat right now. Obviously, you're having people react to 6,600. This is by no means a surprise. If you are surprised about this, you got to study a little bit more. You got to watch the charts a little bit more. You should not be surprised that zero DTE call buyers are taking their profits, and you have some puts coming into the game at 6,600. Key technical level, key psychological level. It is actually the bottom of the transition zone. This is a huge level today, a massive level. If you're surprised that we ran all the way up to here and now we're battling it out, you're just not paying attention. I could understand it being confusing if you're looking at the SPY and you're like, wait, what's special about 657.80? Okay, I get that. That does seem weird. But remember, SPY is just an ETF made to track the SPX. You could trade the SPY if you want, but in terms of the levels you should be watching the SPX levels. That's the actual index. VIX up a little bit. Come on. Buyers need to keep stepping in. Yeah, we took a little bit of a hit there. I should probably keep coming back to this throughout the day because it looks like large positions are being made intraday. So feel free to remind me to keep checking on these. Yeah, we have support. It got bigger, actually. It was 15,000 or maybe 14.5. Now it's 16.5. This put credit spread, the biggest play on a zero DTE basis, is actually growing throughout the day, adding more positive gamma beneath. So it is attempting to put in a bit of a floor. But let's see. That's still quite a bit of red. NVIDIA's down. Tesla's down, Oracle's down, Avago's down, like everything's down. Everything is freaking down. But who knows? Maybe by the end of the day, just maybe, with a bit of luck, we might make it back to green. But from here, the major thing I'm watching is, do we take out 6,600? And then from that point, I'm looking for the upside gap fill on both the SPY and the Qs. I'm always like, damn, I should have bought a dip, and I'm always hesitant like today. That is trading with your gut. Come up with a measurable system and backtest it. If you have an actual trading system, it takes out all the guesswork. There are too many retail traders who are trading off of guesswork, and then yet everyone's surprised when they end up losing money and they're just not profitable. It's like, you don't even have a system to test. You don't know what's better or worse. Like this idea of just like, oh, it looks bullish, it looks bearish. How do you know? And generally, it's like, well, I was taught X, Y, Z. It's like, well, 95% of retail traders lose money. So you're just being taught by people who lose money. Do you think being taught by people who lose money is going to somehow magically help you make money? I implore all of you watching, be very systematic about it. Have your exact entry criteria, have your exact exit criteria. Trade on that. Be as disciplined as you possibly can to only get in exactly when you should get in and only get out exactly when you should get out. And then from there, as you're collecting that data, you can start to mess with the knobs a little bit of like, okay, is there better ways to get in? Is there better ways to get out? Can I change the profit a little bit? Can I change the risk a little bit? Had I done that, how would have the recent trades, how would they have actually performed? But if you're just ripping it, how do you know if it's good or not? You don't. It's just guessing. All right. We have another higher low, and we are testing the 6,600. Next test is the upside gap fill. I have recurring buys in all my long-term accounts to buy $20 of 5 different stock ETFs every day, no matter the price action, dollar cost average. In the long run, that's going to be very profitable for you. In the long run, 20, 30 years from now, your account's going to look awesome. All right. It appears as if we were making a move for that upside gap fill right here. Delta's starting to pop. We're holding 6,600. There's a lot of people like me who are just saying, hey, upside gap fill, upside gap fill, upside gap fill. And that appears to be where we are going. All right. If you're trading NQ, interesting technical level is 665, and the equivalent of the upside gap fill is 726. Vol coming down. Nike swoosh recovery thus far. We have gone from a bearish trend of lower highs and lower lows to higher highs and higher lows. The question is, will we be able to hold 6,600? If we do, how are we going to react to the upside gap fill? Are too many people going to take profits there and send us right back down? Or are we going to get up there, hold, and then other people are going to start to say, yo, is this a full recovery? And then they buy and push us up to 6,650. If I knew how it was going to go, well, I wouldn't be doing this. I'd be a multi-billionaire somewhere. But if I did know that and I decided to stream today, I would tell you guys, but no one knows. All you could do is exactly what we're doing here. Mark out the key levels, set alerts, and pay attention to the reaction at those key levels. That is the name of the game. The name of the game is not predicting, it is reacting. Too many people try to sell you this model of, I predict where the market's about to go. They don't predict shit. They don't predict anything, especially because they're all net losing traders. You show me one guy who can predict the market, but also is up year to date, up over the past 2 years, 3 years, 5 years. They don't exist because that's not what actual trading is. There's a lot of passive money going into ETFs. You might be better off finding specific good companies. I guess I don't really know what that means. I don't know what you're trying to say there. All right. The Russell, not far away from going green, 64 more cents, 0.26%. If this thing can just get up to 244, 30, it's going to get green again. So the Russell is leading the recovery, followed by SPY, and then the laggard right now is tech, which is telling me that finance is probably looking decent. Yeah, look at that recovery on finance. XLF, the financial subsector of the S&P 500, is officially green on the day. Energy recovering a little bit. Utilities are looking good. Industrials are looking good. Healthcare is still red. Real estate is very much back in the green. Consumer staples is already back in the green. And consumer discretionary is red, but trending up. So actually the weakest sector right now on a relative basis is tech. And then actually a lot of the other subsectors are looking, some of them are back green already on the day. So obviously relative to yesterday. Unless you're a day trader that can afford to lose all your investments, stay away from the overvalued market. The rug pull is coming. No, that's silly. That's really, really, from a technical perspective, from a stats perspective, that is horrible advice. Horrible advice. This idea of don't invest at all-time highs is actually, you would have been missing out on a lot. You would have been missing out on a lot of gains, a lot of opportunity. And I get that that logically sounds good of why would I invest at a high? But I believe it was JP Morgan or Morgan Stanley did a study of that, of if you were investing at new highs versus waiting for pullbacks, we're so commonly hitting new highs and the pullbacks are so rare that you'd be missing out on a lot. So it's just bad math. And I get it. I'm not trying to admonish you because it sounds logical, but it's one of those weird things in the market where the opposite is actually true. So this idea of, oh, don't invest because it's overvalued. Well, I wouldn't say if your investing mindset is, oh, I'm just going to put all my money in at once. No, but if you're saying I'm not going to dollar cost average because we're at new highs, that's a very, very poor mindset. The best thing you could do, especially if you want to be super, super passive about it, it's just dollar cost average the same time per month and just move on with your life. I wouldn't try to be like, oh, like we're at high, so I'm going to skip. Definitely don't skip. If there are big discounts on maybe say your favorite blue chip stocks, okay, maybe you put in a little bit more there. If you're like, oh man, I could pick up Microsoft or Apple or Nvidia on a 10% discount. Yeah, okay, that makes sense. But there is the erroneous thought that you shouldn't be putting money into the market when we're at a high. And think about how that would have played out. Here's the daily chart. As soon as we started taking out recent highs, so right here, you would have stopped in June. And even though we're dipping right now, you would have missed out on this entire thing. You'd be like, I can't do it because we're at new highs. You would have gotten in once right here in July and August, but you would have been missing out on this entire opportunity because this recent high, as soon as we cracked it in June, July, you'd be like, nope, can't do it, can't do it, can't do it, can't do it. You would have gotten one opportunity, and then all of a sudden, nope, can't do it, can't do it, can't do it, and you'd be doing it now. So you would have had two opportunities to put in a little bit of money each time, especially if you're doing it in equal units. While someone who's just dollar cost averaging, yeah, they're fine. They're still taking advantage of this generic ride to the upside. Matt, would you consider buying protective puts? I would, if I think the market deems it, and I would be tempted into that thought if we crack this 50 EMA on SPX, on SPY, on QQQ, on IWM. If we start to crack these recent lows, yeah, I would consider it. But I don't see reason for it at the exact moment, especially where, and this is where we get out of the world of stats, facts, and figures, and we're getting into the world of my personal opinion. I think based on how these quote unquote trade spats have gone with China ever since the start of this year until this moment, it seems like it makes big news at first. And then there's a couple days where everyone's like, what's going on? And then it gets resolved and the market keeps going higher. And my proof of that is literally the market. So the biggest thing was in April. Then on this day, the 9th, that's when, hey, we were all good. And every single time there's concern about trade war stuff, guess what? We then pop. Wait, what just happened? What trade was this?
Target filled.
Okay, Icarus number 2. So I didn't trade on this account because remember the account that says $80, that was the one trade of the day and it's now turned off. That is just the orbo. All these other ones are still going to actively trade throughout the day as it sees a good opportunity to trade. So up about $150 per account, and I have 24, I guess. I don't know. You could do the math, but it's up about like 3K. So I'm trading a bit larger, a bit more aggressively on these bigger accounts. Hence the 566, the 441, and the 225. And then I'm trading not as aggressively on these smaller accounts because they are smaller accounts. But what was I saying about this? Oh, I would get protective puts if the market tells me that it's worthwhile. But getting away from the world of stats, facts, and figures, it seems as if anecdotally, whenever these things get spun up, it lasts a little bit, and then it's just actually a huge dip buy opportunity. We are going for that upside gap fill, to which you guys are welcome. I called it out before the market opened. I made money on it. I hope you made money on it. We're not even there yet, but I'm that confident it's going to happen, especially now because if you took the inverse shoulder, head, shoulder, which was called out before it happened, you would have scaled out there, stopped to break even, so you wouldn't be risking anything. You could scale out here, take all your profits, or if you're really confident, you could try to do the last part of your scale all the way up at 6,650. So 1 scale, 2 scale, that would be your third part if you split it up into 3 separate sections. But playing out well. Playing out well. Mag 7, not the biggest uptrend, but the Mag 7 Delta flow is picking up since 953, and around 945, though very jagged, the S&P 500 flow is generically trending up. So it seems like a lot of people are in on this upside gap fill play today. We are only 50 cents away. So on the Russell, 244.50 would be the upside gap fill. No, that's not even true. Did we already hit it on the Russell? Sorry, we did. It didn't have one. That's why it wasn't marked out today, because one did not exist. But the Russell's actually only 50 cents away from going green on the day, as in being above the closing value from yesterday. So that's interesting. Here, let's do this. Let's do this. Let's do this. Great. Great. All right. Well, unfortunately, we're still worse off than the worst point of yesterday. That's what it means when you haven't gotten the upside gap fill. No matter where you are, without an upside gap fill, you are worse off than you were the day before because you're not even at that low. But it doesn't seem like we're that far away. The SPY is targeting 659.77. That is 10 points above where we are. And the Qs are targeting 597.23. So both have one more dollar to go. If I were exclusively a day trader, a scalp trader, as soon as that hits, I'd be done for the day. If I was just a day trader, if I was just a scalp trader, I would have enough money off this recovery, and I carried it with low risk that as soon as that hits, I'd take my money and I'd move on with my life. I'd go to the gym, I'd play RuneScape, I would go hang out with my cat, I would do something else. So if you're just a day trader, scalp trader, at that point, that's enough money. You don't want to overstay your welcome. Obviously, I do have day trades. I do have scalp trades, but I also have swing trades that I need to do something with because they are not looking good. But hey, dingity, ding, ding, ding. We have some green. Oklo's green, Palantir's green. Not looking bad. AMD, green. We have some green. Rum, green. All right. Well, today we started off with a bunch of red, and now we're starting to see a little bit of a flicker. A little bit of a flicker of success. A little bit. A little. Where are we at? All right, we were looking good, actually. What time is it? 24. What time was that trade taken at? That was taken at 20, so that was taken 4 minutes ago. Interesting. Not a bad deal. So these are all just a little bit more slippage. One made 168.63. It literally must be the timing to run the code that, oh, this runs and then this runs and this runs. And I guess that's the slippage. But then why do these three have completely 566, 441? Like, that's a lot of difference between these guys running the same code. I don't know if I'll ever be able to overcome it, though, because I think it's an aspect of the data providers, Trade-Evate, and Rhythmic in the world of sim defunded. All right, SPY is going for it. Qs are going for it. SPX is going for it. We're almost about to hit it. Do not be surprised with profit taking at those levels. There are many individual traders. There are many retail traders. There are many hedge. There are many bots. There's many bets in this world that are targeting that gap fill and will be taking their profits right then. So don't be surprised when we go up there. If it takes a little bit of a hit, the question is, what do we do after? Do we keep recovering and going up, or is that the peak of the day and we vomit back down to 6,600? That's the unknown. That's the reaction that we are watching for to get an idea. But I could tell you, after just seeing this a shitload of times, do not be surprised in the moment that we hit that we see a drop in delta, people taking their call profits, maybe getting a couple puts. Not a bad time to lock in gains. And obviously from a put perspective, it's just low risk because if it keeps going, they're just going to cut it quickly. So I get the trade. I personally wouldn't do that trade because it feels like you're fighting against the intraday trend. But just to call it out there, it does make sense. We need PAL to pump the market. Hell yeah, we do. Total stair-stepping inverse waterfall on SPX. Dude, I hit 200 flights yesterday in, was it 34 minutes or 35 minutes? 35 minutes. This is what I do with my life. One of these days, right there, 200 flights, 34 minutes and 56 seconds. My average power was 216 watts and my average cadence was 91 steps per minute. 200 flights, 34 minutes, 56 seconds. One of these days, stair stepping up, upside gap fill, SPY, Qs, SPX. You're welcome. You are welcome. Honestly, I don't mean this rhetorically. I don't mean this facetiously. What other streamer out there called this out before it happened? Called it out in real time, called out the perfect entry to take advantage of it. Who else is doing that? Who? And it's also not just like, oh, Monday morning quarterbacking, anyone could call out paper trading. No, I was trading as well. I made thousands of dollars off of it. It wasn't just, oh, like saying stuff to say it. No, it's talking the talk and walking the walk. Literally called out before the market opened, called out the perfect entry intraday, and also personally made money off of it. No one's doing that because they're all fake and full of shit, folks. They are all absolutely fake. Unless they are willing to show you their returns, then it's different. Rips is awesome. Well, Rips, okay, you notice the difference there? He's one of the few people who actually shows his broker statements. You notice that difference? You're pointing it out of, okay, you're saying, hey, I know another guy who does this as well. Notice something interesting about him. He's also a guy who is more than willing to be transparent and not only show his trades, but more importantly, show his results, like his brokerage statements, his year-to-date gains, like that type of stuff. You notice that? You notice how the people who are actually consistently accurate with their predictions are also the people who are more than willing to prove that they can actually trade? You're right, Chad. Rips, well, I don't know on this particular one. It's not like I'm watching his stream today. And in all reality, because he streams when I stream, I really don't consume much of his content, but I've seen some of it. He seems pretty shrewd. But then more important than that is he's actually transparent. When he wins, he shows it off. When he loses, he shows it off. He explains what he gets right, what he gets wrong. But you notice that correlation? The people who are transparent are the people who are actually like doing this shit. Now you need to give out calls every morning. There's not trades every day. Sometimes there's clear setups. One of the hardest parts of trading is the days when you know you should just be doing nothing because there's not something strong for you to do. I passed an Apex eval following rips this morning in 10 minutes. Well, yeah, all you have, I mean, you could have done that at market open. If you just arbitrarily went short at market open, that would work. Passing evals is easy. The hard thing is trading consistently enough on a funded account to actually get payouts. That's what matters. But the eval stuff, especially on Apex, you buy 10 accounts, go long, buy 10 accounts, go short. 10 of them are most likely going to pass. Matt calls out the key levels in Goonie Discord all the time. That's probably one of the major attractions of the Goonie Discord. I don't know who Frankie is. He might be awesome. He might not. Oh, he's a Bitcoin trader. That's awesome. All right, surprise, surprise. Where did we stall out? Look at this. We rip, stall out at a key level, keep going, retest the key level, keep going. And where do we stall out again? The next key level, folks. This is not rocket surgery. It really isn't. Well, at the best point today, we were at the worst point yesterday. So that gives you a little bit of perspective. It's where we were at 9:36 yesterday. Well, hopefully this gets a little bit better. I would love recovery up to 50. Battle. This is the battle. Watch. Oh, I don't know which one's going to give us the leading indicator first. Is it going to be options flow or is it going to be vol dying? It could be a combo of the two, but obviously we should pay attention to what the delta flow is doing, and we should also pay attention to VIX, the volatility of the S&P 500. If it starts to bounce, not so good for the bulls. If it continues to die, that is good for the bulls. And then obviously we could watch this options flow, but what you are seeing right now is what a mere 10 minutes ago I told you was going to be happening. And why did I know that? Was that a prediction? I guess you could argue technically it was a little bit of a prediction, but it's just knowing what that trade was. That was the trade. This is the exit point for many people who played the upside gap fill. If you are long playing that, how do you take your profits? You take your profits by selling. If there's a lot of people selling simultaneously, you take a little bit of a hit. I guess it was a prediction, but it was a prediction based on seeing this exact thing play out hundreds and hundreds of times. Hundreds of times. What are your thoughts on short the VIX? Like the concept of shorting the VIX? I mean, it's profitable. VIX generally loses out to gravity. You just don't want to be too early to the trade. Uranium is ripping. Well, all these rare earth minerals right now are having a pretty good day. What time is it? It's just when does Icarus turn off? Icarus has turned on. Icarus is on from 10:15 today until 11:15 today. So we're right smack dab in the middle. Icarus turns on at 10:15. 10:15 to 11:15. And then there's depending on how the momentum is, it turns on a little bit in the 11 a.m. hour as well. Oh, wait, no. I'm looking on the short side. Fuck, I fucked up. Scratch that. Icarus is on from 10:15 to 10:30, and then 11 to 11:30 on the long side. But if it's on the short side, if the market starts to take a hit, it's on the entire 10 a.m. hour, 10:15 to 11:15. But it's a little bit more sparse on the long side. A little bit more sparse. So when's the next 10:20? No. Oh. So for me right now, if Icarus does go long, it wouldn't be until the turn of the hour at 11 a.m. So Icarus is going to be quiet for a second. Does that mean I want to manually trade one of these accounts? Does that mean I want to manually trade one of these accounts? I'm looking at this account right here. The FFN 2436. It's currently at 51,310. Do I want to trade this one account? We are at this key level of 700. We are at the key level of 700. We are putting in a higher low. We are on the bullish side. But we did just hit that. What's the next target? 48. We're at 17 and 50, basically. This 2:10 a.m. high. 11. The real question is do I want to risk 30 points? Because my risk would be 680. That's the real question, is am I fine with that risk? Yes, no, maybe so. Am I okay? 25, I have 2. That's going to bring it down $1,000 if it loses. Am I okay with $1,000 risk? It is trading with trend. It is trading near some potential resistance, though, on SPX at least. But it's knocking on this door. I waited for a dip. The question is it going to actually break through, or is it going to double top? You don't know. No one knows. Remember when I said it's a game of reaction? When you went up, I didn't want to chase there. I wanted to wait for a pullback. That would be my established risk. Do I think it's going to keep going? 50-50, but what is the risk reward? What is the risk reward?
Order filled.
Okay, 80, so 30. 11, 30, 40, 40. All right, there's the trade. So what I did here, I'm just trading on one account right now. It's a 1-to-1 risk to reward. My target is roughly the same distance away from as my risk. Ideally, this gets locked in, and then I just move my stop to break even, and then I have the runner. That's the concept. And of course, where this goes wrong is if this is a double top. We ran up to the key level. I waited for the pullback. I said, okay, it looks like a higher low. We're seeing a pickup a little bit in the Mag 7, but mainly in the S&P 500. All right, interesting. You can only really base it off of the information you have currently at that time. So I'm just basically, it's a bet continuation, and I try to not chase the high, and we'll see how it goes. We'll see how it goes. I have well-defined risk. I have well-defined reward. Obviously, if this hits, I'll be losing 2 units because I have 1 unit of risk, but 2 contracts. So I'd be losing 2 units. If I lock this in, then there's no risk because I'm plus 1 unit, but my stop's at break even. So the first situation is either losing 2 units or gaining 1 with no risk. That's the concept. And so basically I want to see this lock in, and I don't mind that it's undershooting a key level at 50. Ideally this hits, I gain 1 unit, stop to break even, I move on with my life, but we're already looking good. Balls. I don't think it really takes balls to do a 1-to-1 trade. I obviously, where did we get 37? Mine's at 45. I came up with 45 because that's basically how much I was risking off my entry. So we'll see. Here's a look at Bookmap. This is another thing that I'm trying to be mindful of. There's a lot of people selling at 50, which is why I'm trying to scale out just before 50, just in case it gets rejected right there. So right here, there's a lot of sitting passive sell orders, once again, at 24,750, which is exactly why I'm front running it on the first one a little bit. So there's various things coming into consideration of how I'm handling it, but I'm hoping that even if it gets rejected there, well, at least it should give me my fill. Thankfully, Matt doesn't mess with those dark arts anymore. I'm about to start messing with the dark arts if it's what I need to do to make this money. All right, we are attempting to hold this. The next stop, if we hold here, so at this point, if you're long, you could probably safely move your risk up to this recent low. I would really be keying in on this 5-point region, 6650 to yesterday's close, 6655, right here. This 5-point region, that would be my next real level of interest if we hold this. Remember, it's an if then statement. If we hold this, then I'm looking for this. If we crack this recent low, then I'm looking for 6,600. I have the bull case. I have the bear case. Obviously, I'm currently betting on the bull case, but I think it's always good to know what the other team might be looking for, because then that might intrigue you to get on that team, or at least get out of your position if you think it's going bust. The Russell is actually back to green on the day. So the small cap sector is officially green on the day. AMD, Oklo, and Palantir are also all green on the day. SoFi is not far behind. And then Apple is also not far behind. Apple's almost green. Actually, Microsoft's not that far off either. So AMD, Oklo, Palantir, all green. SoFi, Apple, and Microsoft, not the farthest away. Not the farthest away. Here's a look at flow. Mag 7 popped, going flat. S&P 500 continuing to trend up. That makes me confident in my current trade. I do very much like that trend. It seems as if a lot of people are trying to support the low from yesterday, at least at the moment. At least at the moment. If I wanted to, I could actually take all my... Do I want to front run this? Because I'm looking at that low. I could, but 700, we're not that far away. I think I need to leave it here for a second. I think I might stick to this initial plan of just leave it until either one's hit. Either I lose 2 units or I gain 1 with no risk. I could just take all the risk off the table, though. Or I could just take the profit now. I'm up $1,000 on this funded account. Decisions. We'll let it cook. Mag 7. SPY is still going. People are punting their puts and they're buying their calls pretty much ever since 9:47. All right, we are back above the support at 6605. There's now hang on, it looks like there's a new position. Let me zoom in on this really quick. Okay, you might want to be watching 6640. This is a new position as of regular trading hours today. I didn't have this marked out because the position didn't exist at the time, but there is a little bit of a positive gamma node. It's not the biggest one, but intraday, it might cause a little bit of a hiccup at 6640, and then you'd be watching 6650. So 6640, not the most impactful. As you saw, I had to zoom in to really see it, but it is a new position as of, actually even in the last 15 minutes, it's a new position. So you might want to just slap that up on your chart as a potential thing to watch. You might want to slippity slap that up. Mag 7. SPY. All right. Let's see how this one goes. Am I still green? I am. I would much prefer this locks in just so I can no longer have to pay attention to this position. As soon as it locks in, it just becomes incredibly easy because then I just don't have to worry about anything. It's just the stop's there. But the fact that I still have to manage this. The other thing I have to consider actually is the consistency rule. How much money? I made $1,000 yesterday. Do I just want to take the $1,000 just to be consistent? How do I want to handle that? So from a trade perspective, I love the trade I have on right now, but I have to consider the consistency rules of this firm. I don't know if I should let this run past $1,500. I might need to cap it because I know I made 1,000 yesterday, hence why the account's at 52. Whoa. Well, that quickly changes. That's not something I considered at first when I set this trade up because I think the account would be very close to 1,500 even if the first one hits. How do I want to handle this? We'll see. We'll see. Isn't that a losing trade? Risk reward at 50% hit rate? No, because the runner is far larger. This is 1-to-1, but this is gaining 1 unit. This is losing 2 unit. But when I gain 1 unit, then it's riskless, and then you have a runner of multiple more units. So no. If it were 1-to-1, then it would just be a break even. Probably, well, technically not with commissions. You'd be a slight net loser. But damn, do I need to... I might need to cap this at 1,500 today just to consider the consistency rule. I think that's roughly right if this gets a fill. All right, Bookmap is still showing quite a few people attempting to unload at 750 flat. Obviously, both of mine are front running that at 45 and 47.50. And I believe I should be good at the 1,500. I believe I should be good. If it hits. It got really close to filling on that first one. It got up to what? 43.75. Oh, but if I'm playing it differently, do I just want to take all risk off the table? It's getting close. It's 15 points away. But then that would cut into my unrealized drawdown. That's another thing to consider that you wouldn't have to consider on your own funded account. If this were my own funded account, I would have already moved my stop to break even just because there's no unrealized drawdown that you have to consider. But because it's SIMDA funded, you have to consider the unrealized drawdown. So I think that's an important thing for me to state, that the way I'm managing the risk on this right now, it is different than how I would manage it on a personally funded account. When it gets this close to my target, there's no way I would be letting my own funded account on a day trading futures account actually take a loss. My stop would be at break even. And if it gets like hit, I'd just be like, ah, shucks. But the difference here is on a SIMDA funded account. Remember, your unrealized drawdown is going to be based on kind of that high water mark, which was basically my target. So it eats into your buffer. I've already made a couple videos about it. I know we've already talked about it in here. I think it's the worst fucking rule ever. I really, really do. Oh, wait, you guys are saying this one's realized drawdown on FFN? Well, that changes it. Are we sure? that it's realized? Because I would have played that way differently then. I appreciate that information. I didn't realize that any of them did realized. I thought they were all in cahoots together doing unrealized. Well, now I feel dumb. I wish I should fact check that. That's on me. That is 100% on me. If I knew that it was realized, I definitely would have just made it a freebie play. And then I'd be frustrated because I would have gotten knocked out and it would have been a point away, a little bit more than a point away from my target. Fuck, dude. Well, I wouldn't mind if it bounces from here. Obviously, I could just move my risk up to 97. So instead of taking on 30 points of risk, I could take on 15. Like if it bounces from here, if we take out, I don't know, 30, if we take out 25, 30, if we come back up to this region where my cursor is right now, yeah, moving my risk up just because that's cutting my risk in half. The S&P 500 is just dancing around at the low. So the market basically had a concerted effort to get up to that trade. And ever since then, the bulls aren't that strong. The bears aren't that strong. We're just dancing around at the upside gap fill at 6,620. If we get going, I'd be watching a little bit of 40, but I'd really care about 50. And if we break down, I'd be watching 600. Did we hit it? We didn't. I appreciate that, though. I didn't realize that one. Actually, that makes me like these guys even more. I'm going to look into it. And if that's true, I will tell you guys all about it tomorrow because that would be amazing. That's actually amazing. What time is it? I will double check all of that and I'll let you guys all know tomorrow. Don't you worry. We don't have to fret over it. I will check it out and I will let you guys know. I will let you guys know. I believe it to be true. Gucci, I don't think you are wrong by any means, but it kind of makes me want to dive into making sure I understand all of their rules. So really what I want to dive into is the other, I guess, nuances versus other firms. Fuck. Here's our lower high. Not liking that. Let's hope it doesn't make a lower low because then we might be having a trend change in this super short time frame and it would be specifically against me. I'm hoping we find support here. See how we found support at 700, found support at 700. I'd feel way better if we took out 23. Dude, if we take this out, based on that, what you're saying, Gucci, I honestly just might move the stop to break even because then it's a freebie trade and I'll be able to keep my gain on the day of 225. Interesting. Fuck, dude. Is this coming just to wick me? Is it going to wick me out? Are they just targeting that last low? I've been on this side of the trade way too many times. Shoulder, head, shoulder. Are they coming to wick me? Are they coming to wick me? Finger on the trigger. I might close it a bit early. Save myself a couple points. Finger on the trigger to close this. Am I going to get lucky? Finger on the trigger. How's it going to go? I'm getting ready to murk the position. I'm getting ready. I'm getting ready. What are we doing? What are we doing? I'm getting ready. Buyer's gonna step in. Is it a little fake out? A little wick fake out? That's what I'm hoping for, obviously. But if it keeps going, getting ready. Decisions. Game time decisions. Game time. I'm almost worried I might accidentally hit it. Come on, where's those buyers? Get it back up. Let's test 700. Get it back up to 700. Come on. I could probably use 70 now because it did. So before, what I was worried about right here. See how we had a low at 83. See how we had a low at 80. A lot of people put their risk right there, and see what happens is you knock it and it bounces back up. The issue is that's a fake out breakdown. You don't know if I show you this, you don't know if this is a fake out breakdown or a real breakdown, because sometimes you have real breakdowns, which is exactly why you saw my finger like ready to go there. I'm fighting the trend. I don't think so, brother. I don't think so. All right, we're back to battling it at 700. That might have been premature. Party is back on above whatever this is. This random ass wick 23. We did recapture 700. Let's see. Can it hold? Okay, so some of those people, the point of control just moved up to 700, key technical level, key psychological level. We are way above VWAP. We're getting a bit of a bid. There are people trying to dump at 2,725 right now on NQ, and there are still some of those orders at 50, and I expect some of them to come back if we get closer to that price. But 700 seems to be an interesting pivot point right now that the markets are attempting to react to. I don't like the lower highs and the lower lows. Really, what I don't like is the succession of this low and this low. If we can get a higher low, okay, maybe we have a turnaround then, but I'm watching that very closely. I'm watching that very, very closely. What are we gonna do? Yeah, we had all these. See how even this one, it wicked it out here at 10:31 this morning, wicked it just to bounce anyway. What is this looking like? What is this looking like? We're good there. Not as good as I'd like to see it, but it's really not that bad. VIX is getting pinned to 21, the Russell. Everything's just kind of stalled out now. We're not really trending anymore. Oh, here's some positive gamma. 40, 50, 40, 50, 60, 75, 60. Dude, if we get up to 6675, that's going to be quite the day. If we could get to the other side of this positive gamma. See how we ran up to positive gamma and things slow down? That's the nature of negative and positive gamma. Things slow down in positive gamma, and that was not there this morning. If I go back to 9:30, this was all negative. So throughout the day, people started building in some ceilings, and you're seeing the impact of that right now. You're seeing the impact of that right now. All right, I'm going to set, let me make this, it should be blue. I don't want to start changing colors up on you guys now. All right, I'm setting alerts for intraday breakouts just to see if that momentum returns. And then I'll set some alerts for taking out some of these recent lows just in case that ends up happening as well. You never know. You never know which way it's going to break. Would love for it to not just break to the upside, rip to the upside, but that's just because of my own, I don't know, degeneracy, idiocracy, whatever you want to call it. Over leveraged degen plays. All I can tell you, folks, is we are currently at a very important key level. And actually, throughout the day, the levels become that much more important. And as we are here, I have no specialty prediction of do we break out and pop or do we get rejected and fall. All I can tell you is watch. Watch this range. Pay attention for range breakouts. Pay attention for range breakdowns. That's all you can do. The breakouts and the breakdowns is inherently decided by people who are about to trade. So unless you're going to predict accurately what the entire cumulative market is about to buy or sell or whatever they're going to do, all you could do is sit there and just pay attention. Pay attention. And if you identify an opportunity where you can take a stab of the current trend or mean reversion or whatever your style is with minimal risk, that's exactly what you're looking for. Are you going to stream Jerome Powell? Without a doubt. Without a doubt, I will be streaming that. So he's speaking at 12:20. So he's speaking in about an hour and a half. He's speaking about an hour and a half. Dark pools, that dark pool stuff, I think that's kind of useless, Ray. I really wouldn't be. I've never seen anything convincing from a statistical standpoint of quote unquote dark pool levels. I've seen it before and I don't buy it at all. I think a lot of people, I think there's some utility. I'm not saying it's just like complete hogwash or anything like that, but I think it's a big misunderstanding of what they are and like what dark pool levels even mean. So I would be, it's one thing if you're just using it as like, oh, those are interesting levels and I'll pay attention. But I would very much advise against not making that your like end all be all filters or what you're basing your trades on. Matt, can you share your positions, please? They are, I'm long NQ. That's what I'm in this day trade. But my swing positions are all in the Discord. All right. Is this the low? Is this the low? We are back above the low. So basically, our best point today is effectively equivalent to the worst point yesterday. What do you think about going long TLT ahead of the chair replacement in May? It seems like it's not priced in. What are you basing that off of? Why do you think it's not priced in? That might be a good trade or not, but whenever I hear things like that of like priced in or not priced in, I don't know a lot of the times of how people come up with that reasoning. All right. Well, I wish my entry was at 700. I do feel fortunate that this was a double bottom, but it was like kind of a fake out right here. See, we overshot it just barely. But now knowing, shout out to Gucci for letting me know that this is a realized drawdown because, like I said, if we start to push 25-30, I might just rip it right to a freebie play. And if I hit it, I hit it. If I hit it, I hit it. But I do want to cap this account at 1,500 just because of the consistency rule. So I don't want to swing too hard because that's going to make it do...
Order submitted.
What? Icarus, where have you been all day, buddy? Icarus is going for 27.50. Icarus coming out of left field on us, folks. All right. We're going to call it when either Icarus does or doesn't hit today. Because then we have another stream later on. Icarus, once again, is targeting 27.50. Little bit of a ATR measured move. Little bit of a potential double top as well. Come on, Icarus. Come on, Icarus. Let's see if all this green goes more green.
Target filled.
I love to hear that. I love to hear that. I love to hear that. Funded Futures Network, FFN drawdown. FFN drawdown rules. We're not going to let this happen to me again. Fool me once, I'm a fool. Fool me twice, I'm a fucking dipshit. During the evaluation phase, FFN uses a realized trailing intraday drawdown. This means the drawdown limit adjusts based on your highest realized profit during the trading day, not just unrealized. Yeah, but what about once becoming funded, the drawdown transitions to essentially a static drawdown. This means the drawdown limit means relatively fixed and only trails the account balance by a small amount, typically $100 starting the starting amounts. For example, if you start at 50,000 and you get to 52, your account would be terminated if it hits 50,100. That makes sense. This provides a more stable risk. Drawdown amounts. So it still all disappears after you get to the once you fill out the buffer, it becomes frozen, which, yeah, okay, that makes sense. That makes sense.
Target filled.
Target filled. Target filled. Target filled. Target filled.
Target filled.
Target filled. Target filled. Well, there you have it, folks. Another day in the world of a streamer who allegedly doesn't trade. You know, imagine how this would go if I actually did trade. Imagine how it would all go. VIX is taking a hit. Hot dog, hot dog, hot dog. All right, folks, here's the plan. I'm going to go grab a coffee. I'm going to go meditate. I'm going to go hang out in the Discord a little bit, but I'm going to be back. I will catch you guys in just over 1 hour. Jerome Powell speaking today. So I'm going to see you guys in an hour. Go grab a coffee, go grab a sandwich, do whatever you need to, hit the stair stepper, eat some buff chick dip. I don't care what you do, but let's take a bit of a breather, pay attention to the key levels, 6640, 6650, 6655. Those are the next key levels on SPX, 6640, 6650, 6655. Watch those to the upside. I'm going to catch you guys in a little bit. Turn on your notifications, subscribe, all that good jazz. If you're in the Discord, I'm going to be there in a hot minute. I believe Piper just fired, so I need to give you guys that. I hope you're making a shitload of money. I hope you're having a great day. Shout out to Apex. If you want to use, get 80% off, and the eval to funded fees are very cheap right now. Lifetime, $85. Use that code Goonie. And if you want to use Spot Gamma to do all of this tracking, which I don't know how you would trade without it, make sure to use that link as well. We are the only community they give 80% off to, basically because we send so much business their way, and they really, really like dealing with the Goonie community because you guys rock. That's what I have for you. I'll catch you in just over an hour. Like I said, I will be on YouTube. I will be on Rumble. So wherever you're watching me right now, I'll see you in about 1 hour. I appreciate all the good vibes. And here's to the recovery, I guess, actually recovering. Catch you in a bit. Peace.